Hello viewers, this is Bhaskar welcoming you back to Bhaskar's Insurance for You and Me series. Continuing our discussion on the health insurance products, in this episode we will discuss about the meaning of the term sum insured and different policy clauses related to the same. Let us first answer the question, what is the sum insured in a health insurance policy? The term sum insured refers to the amount shown as sum insured in the policy and represents maximum amount that is payable by the insurer in case of a valid claim under the policy during the policy period. If the policy is a long-term policy valid for more than 1 year, the sum insured refers to the maximum amount payable in 1 year period. The essence is that the sum insured represents maximum liability of the insurer towards the insured person under the policy. There is no standard definition in health policies for the term sum insured. The sum insured is opted or predefined by the insured and the premium paid varies depending on the sum insured. The sum insured is shown in the policy schedule issued by the insurer. There are two types of sum insureds. In case the policy covers more than one person, the sum insured could be specified for each of the insured person separately, in which case it is referred as individual sum insured, or the sum insured could be specified as a single amount for all insured persons under the policy, in which case it is referred as floater sum insured. The individual sum insured refers to the company's liability towards the single insured person, whereas floater sum insured refers to the insurer's liability towards all the insured persons together. Most of the health insurance products provide a renewal benefit known as cumulative bonus benefit. As per this, once the policy is renewed without any break-in period and no claim was made during the expiring policy period, the sum insured stands increased on renewal by a specified percentage. So wherever the policy carries such cumulative bonus benefit, the insurer's liability under the policy is for the amount of sum insured, including cumulative bonus. There are many limitations to the sum insured. As sum insured is defined as the maximum liability of the insurer, whether all admissible claims not exceeding the sum insured would be paid in full. To answer this question, we need to understand the concepts of sublimits, deductibles, copayment under health insurance policies. It is not necessary that all policies carry all these clauses or any of these classes. The consumer need to check for these wordings in their policies and be aware of the kind of impact this would have on the claim amount receivable in case of a claim. So what is meant by sublimit? Most of the health insurance products include sublimits in the policy coverage. Sublimit is a cost sharing arrangement in the policy between insurer and the insured, wherein the amount payable is limited up to a predefined limit. The sublimit could be fixed as a certain percentage of sum insured, or as a fixed amount, or both as a percentage and amount. The sublimits could be applicable either on a certain item of expense or for certain specified procedures or treatment. Few sample wordings of sublimits are explained here for our understanding. One of the wordings says, the expenses incurred on treatment of cataract shall be covered up to 25% of sum insured or rupees 40,000, whichever is lower per eye. This is an example of sublimit applicable for a specified procedure. Let us assume that the policy is taken for a sum insured of rupees 1 lakh and a claim for cataract is preferred for rupees 50,000. As per this sublimit, the amount payable is limited to rupees 25,000 only, being 25% of the sum insured. Such sublimits may be imposed for various procedures like knee replacement, angioplasty, hysterectomy, infertility, treatment of hernia, etc. Another sample wording reads as room rent, boarding, nursing expenses limited up to 2% of the sum insured, subject to maximum of rupees 5,000 per day. This is an example of sublimit applicable for a specified item of expense. Let us assume that the policy is taken for a sum insured of rupees 1 lakh and a claim was preferred wherein the room rent was incurred at rupees 3,000 per day. So as per the sublimit, the amount payable is limited to rupees 2000 per day only, being 2% of the sum insured. The excess room rent incurred will have to be borne by the customer. Such sublimits may be imposed for expense items like room rent, ICU room charges, ambulance charges, etc. Now coming to the term deductible and co-payment. What is meant by deductible and co-payment? Deductible and co-payment are again types of cost sharing arrangements under the policy where a certain portion of claim is to be borne by the insured and is not payable by the insurer. The co-payment is fixed share of the claim amount that needs to be borne by the insured and is generally specified as a percentage of admissible claim amount. Whereas the deductible refers to the amount of claim beyond which the insurer's liability commences. In other words, it is the trigger point beyond which the insurance benefit starts. This is generally specified as a fixed amount, and if the payable claim amount falls within the deductible amount, no claim is payable. Generally, the deductible and co-payments are applied at overall claim level and not at specific expense item level or a procedure level. The co-payment clause may be applied for all claims under the policy, or for claims if the claimant is beyond a specified age, or for claims reported from certain geographical zones. Few examples of the wordings for these terms we'll see now. One sample wording reads as, each and every claim under the policy shall be subject to a deductible of rupees 50,000 on admissible claim amount. Let us assume that the policy is taken for a sum insured of rupees 2 lakhs and a claim was preferred wherein the payable claim amount works out to rupees 1,50,000. Due to application of deductible, the insurer's liability is triggered beyond a claim amount of rupees 50,000 only. Hence, the claim payable will be rupees 1 lakh. Similarly, another sample wording reads as, policy is subject to co-payment of 20% of each and every claim amount for fresh as well as renewal policies for insured persons whose age at the time of entry is 61 years and above. Now let us assume that the policy is taken for a sum insured of rupees 1 lakh and a claim was preferred wherein the payable claim amount works out to rupees 50,000. In case the claimant is more than 61 years of age, due to application of co-payment, the claim amount will be reduced by rupees 10,000, being 20% of the claim. Generally, the cost sharing conditions like sublimits, deductibles, copay are applied in respect of policies or plans where the sum insured is low as cost control mechanisms. It is important to examine the policy terms to check for this kind of cost sharing arrangements while purchasing health insurance policy. While these sublimits and deductibles etc. help in keeping the premium levels low, the impact on the receivable claim amount could be high. So customer has to be mindful of these aspects before finalizing the insurer and the insurance product. Now, how to fix the sum insured under health insurance policy? There is no fixed formula to arrive at the sum insured required, but few points that needs to be kept in mind while deciding this are as follows. The sum insured is required to be equal to the likely medical expense one may need to incur for treatment during a period of 12 months. The expense to be incurred would depend on the nature of illness, nature of procedure, type of hospital, location of hospital, category of room one opts to stay, etc. etc. The expense is also dependent on the age of the insured. As the age increases, the medical cost can increase because of comorbidities. The number of persons getting insured under the policy and their age demography is another important criteria. And there is an increasing trend in claim frequencies, and recurrence of illness is not rare. Considering the current medical cost in mind, in my personal view, a sum insured of around 5 to 7 lakhs could take care of most of the illnesses for one person in a city. Where the policy is taken covering a family unit of 4 members, the self, spouse, and 2 children, a floater sum insured of around 15 to 20 lakhs would be a reasonable amount. Is it possible for sum insured to be enhanced during the policy? The sum insured under health policies can be increased at the time of renewal of policies. The proposal for such increase is subject to the insured going through the underwriting process of the insurer. That is, a fresh evaluation of the person will be carried out, which could include medical evaluation also. In our earlier episodes, we have discussed on conditions pertaining to coverage of pre-existing disease and also certain waiting periods like 30 days waiting period and waiting period for specific diseases, etc. So these conditions are applicable for the increased sum insured as if the enhanced sum insured is a fresh policy. This is a very important condition which one must know. For example, let us assume that sum insured under the policy is increased from rupees 3 lakhs to 5 lakhs at the time of renewal, say on 1st February 2024, after 5 years of the policy being in force. Also suppose that the policy has a 48-month waiting period for knee replacement related claim. In case the insured prefers a claim for knee replacement in the renewed policy, the sum insured available for such a claim is only 3 lakhs. The enhanced sum insured of rupees 2 lakhs will be available for knee replacement claim only if another 48-month period lapses after the enhancement of sum insured. That is, the enhanced sum insured has to go through the 48 months of waiting period afresh from 1st February 2024. Many of the health policies also carry a provision for reinstating the sum insured. Now, what is meant by reinstatement or restoration of sum insured? As we have discussed, the sum insured opted is the maximum liability of the insurer under the policy. However, some of the insurance products have a provision for restoration of sum insured, which is also known by various other terms like reload, refill, recharge, reassure, etc. In simple terms, this means that if the policy sum insured is exhausted due to one or more claims, the policy provides for reinstatement of sum insured. The terms and conditions of reinstatement varies from product to product. This cover is mostly inbuilt into the base cover for certain plans or for certain sum insureds. This can also be provided as an optional cover in some products with the additional premium payment. Some of the sample wordings with explanation for this restoration benefit are as follows. One type of the clause could read as, this policy will provide for automatic restoration of base sum insured in the event of exhaustion or insufficient base sum insured and cumulative bonus during the policy period, provided that the maximum liability under a single claim under this benefit shall not be more than base sum insured, and the restored sum insured will be available subsequent to the first paid claim under basic inpatient hospitalization expenses cover. So this benefit is termed as restoration benefit or even reassure benefit. In these wordings, the number of reinstatements are not limited, meaning thereby that the restoration continues and repeats till the policy expires, with the limitation that a single claim cannot be more than the base sum insured. Some products limit the number of times sum insured is restored. The restoration may be available for all claims under the policy or for all claims excluding road traffic accident related claims, or only for claims unrelated to the claim under the policy prior to a restoration of sum insured, which are normally called as related claims exclusion. A different wording reads as, the company agrees to automatically make the reinstatement of up to base sum insured once in a policy year. This is termed as a recharge benefit. For example, if the insurance policy was taken for a sum insured of rupees 3 lakhs and the sum insured and applicable bonus is exhausted due to one or more claims under the policy, the sum insured stands reinstated by another rupees 3 lakhs for the balance policy period. This reinstated amount is available for any admissible claim under the policy. In some products, the recharge benefit is not applicable for road traffic accident claims. A different wording reads as, Once in the policy year, the company shall provide for a reload of the sum insured up to the limit as specified in the policy schedule. This is termed as reload benefit. This is same as recharge benefit, except that the amount of sum insured reinstated is as stated in the policy schedule and is not necessarily equal to the base sum insured. In some of the products, the specified additional sum insured is made available for claims pertaining to road traffic accident claims alone. The other regular restoration clauses, they are not applicable for such road traffic accident cases. Similarly, there is another optional cover under some of the products which have come into being recently, wherein the sum insured opted under the policy automatically stands increased at renewal on the basis of inflation rate in the previous year. This cover can be opted by paying additional premium. As newer and newer products are introduced in the market, many variants of these benefits are possible. Considering this, and so many variants are already available in the market, the customer has to go through the wordings pertaining to this restoration clauses carefully and understand the following. What is the reinstatement amount? What is the number of times the sum insured is reinstated? Is the reinstated sum insured applicable for all claims or only for claims after the first claim? Is the reinstatement applicable for road traffic accident claims also or not? Is the reinstatement applicable only for claims unrelated to earlier claims under the policy prior to reinstatement, or is it applicable for all claims? Is the reinstatement applicable for all policies of the product or only for certain plans or for certain sum insureds only? So in this episode, we have seen the meaning of the term sum insured and various other clauses like sublimits, deductibles, co-payments, which have impact on the claim amount receivable under the policy, and also the different reinstatement clauses, reinstatement of sum insured clauses. We will continue the discussion on health insurance in next episode with some more details on the product. Until then, bye from Bhaskar.